Welcome everybody to the 40 Finance channel. My name's Jeff Beers, and today I'm going to be looking at PayPal stock in 2020. Is this a good stock to invest in right now? Let's take a look. But hey, before we jump in, thanks to everybody who subscribed to the channel. If you're interested in stock market analysis, investment ideas, and personal finance videos, then please join us by subscribing to the 40 Finance channel. Alright, so the key with PayPal stock, and I think why it's so intriguing to all investors, is just the rise of the digital payment atmosphere, right? So PayPal was definitely probably the pioneer in digital payments when they were started alongside eBay way back when. But that world is only growing more. I've seen several estimates online that digital payments will hit well over $3 or $4 trillion in 2020. And honestly, none of that really surprises me when you think about all the different methods that are out there. And that's the interesting thing about PayPal is formerly they were kind of the only person in the race, right? But there's several new players in the competition, including names like Square, even Google and Apple have their own payment methods, and some of the other credit cards and banks out there are trying to come up with their own strategic ways to get into digital payments. And the biggest growth cycle right now in these digital payments outside of the standard e-commerce is of course the Venmo and Cash App. PayPal has Venmo, Square has the Cash App. These two are sort of going head to head. There's a lot of places online that you can sort of track how many downloads and active users. Right now, I do believe that PayPal's Venmo has the lead. There is some projections though that the Cash App from Square will eventually take over the lead in that space. The question that I've been trying to dig into is downloads the lead, right? Or is it the person who figures out how to monetize these free money transfer apps? That's kind of the squishy part of the whole thing. Like we know, you can have 1 million, billion users on anything, but unless you're getting revenue per user, then it starts to get a little murky what the game is. In my personal opinion, I think PayPal's fundamental architecture within the e-commerce space gives them maybe the lead to take Venmo free users and turn them into something on the PayPal side, but that's really just speculation on my part. The whole tale of digital payments and the free cash apps are going to be told over the next 2 years, with the secret being who can turn all these users into a revenue stream. All right, so looking at PayPal stock overall, you got a price today of about $120. PayPal's had a pretty good 12-month run, 52-week range of 94.51 up to 124.45. They had a lot of growth coming out of the gate last year around January, but then they had an earnings miss, sort of sent things down, and now they're creeping back up to the bar that they set earlier in this 12-month cycle. So ultimately where the stock price stands today is you're back to the par of a run-up that they made last year. The question is, of course, for investors is how much higher can it go from here? You got a PE right now of 57.72. The forward PE drops relatively significantly down to 30.46. So it's still not the cheapest stock on the block from a PE perspective, but it's always good to see the forward PE coming down. And in PayPal's case, you have a growth story as well, so there's no dividend. You're really banking on, is PayPal going to hold a strong place in the future of these digital payments? All right, looking at valuation metrics over the past several quarters, Really the price to valuation for PayPal, it hasn't changed a ton. I wouldn't say that this is the most expensive time to buy PayPal. You go all the way back to, let's say, 12/31, you had a trailing PE of 48. Today's trailing PE is 49. Back then, the forward PE was 29. Today, the forward PE is 30. From a price to book ratio, that's eked up a little bit. You had 653, and now current price to book is 757. So your ideal price to book on a standard fundamental play is going to be as close to 1 as you can possibly get. But with a growth technology stock, those are sort of hard to come by. So I would say the 757 is reasonable compared to the rest of the industry. All right, going to the TipRanks dashboard and looking at the best performing analysts. Right now, the target price sits at $129.54. That's a median target across 16 analysts. We've got 14 buys and 2 holds. So analysts are feeling good. They're not giving you that sort of rocket ship to the moon projection, right? This isn't a plus 50% stock, but they do see growth over the next 12 months. You got a high target of 153 and sort of a bear case at 110. So relatively stable, and I think that that's the nice thing about PayPal. I don't think that they're at risk to lose a big chunk of their stock value. The difference is, though, that you trade some of that stability compared to, let's say, a Square, where you're going to have faster growth but more instability and the likelihood that the stock could fall down 50% on any day. It could also gain 50% any day. You don't have to sweat that as much with PayPal just because they've been in the game for so long. All right, so really the best way, in my opinion, to figure out is PayPal stock a buy in 2020 is to throw it up against some peers. I use the comparison tool in TipRanks to do this. And if you just stack up some basic metrics against Square, you've got market cap for PayPal at 140 billion. Square is 35 billion. So Square is roughly 25% of PayPal's market cap. Square does not have a PE nor a forward PE. They're still digging through the growth period, no profitability yet. Yearly gain for PayPal so far has been 23%. Square's at 8%. TipRanks analysts, you got a strong buy rating for PayPal. You got a moderate buy for Square. And difference in upside targets right now, PayPal has a plus 8% and Square has a very small downside risk. That being said, so between those two right now in today's day, PayPal versus Square from a stock fundamental standpoint, PayPal by a mile. It's really no question, right? And I think PayPal has the avenues to plug into a lot bigger plays. I know the appeal for Square is bringing payments to the people, bringing small businesses with their little credit card machine. Those are all good things. But when you're with PayPal, you kind of get access to these gigantic merchants, right? The Macy's and the Walmarts and the things of the world where people are just processing millions of dollars, potentially on a weekly basis. That's a lot of fees. They add up quickly. Now, you might have noticed on this board, I included V for Visa, and that's where my mind goes when I talk about, is PayPal stock a buy? At the end of the day, I like PayPal. I like their future. I think it's definitely worth getting some PayPal action, either as a standalone stock or part of some sort of fintech play, ETF, or however you want to get into it. At the end of the day, though, when it comes to these payment providers and the future of digital, my personal opinion is I stand by the fact that Visa stock is so freaking strong that I just don't know if I could ever say that PayPal or Square is a better play than Visa. Don't forget, with Visa stock, you're not playing the credit card game. You're not worried about credit scores and people defaulting on loans, any of those things. This Visa company is set up simply to make transactional revenue, right? So anyone who comes through and charges across the Visa brand, that's where Visa wins. Take a look at their stock history, guys. It is insane, and the growth is going up. They're way into the digital game. I just like them a little more than Square and PayPal from a value play. However, between Square and PayPal, I'll take PayPal every day. All right, so that's my take on PayPal in 2020. Hope you guys enjoyed this video. We'll see you on the next one.